Hey traders, Raghee here, and in this free recap video, I'm going to walk you through some implications. We're about 48 hours out, not even quite that, before we get to Thursday's ECB. So actually, no, tomorrow's the last session. But I'm giving you a quick heads up on what I'm going to be watching for tomorrow, and the actual event, the catalyst for the volatility that I'm looking for is going to be Thursday's 8:30 a.m. Eastern ECB Press Conference. So it's at the presser that most of the volatility will kick off, because nobody's expecting the ECB to change the rate, the minimum bid rate, 45 minutes before during that announcement. So everything boils down to the presser. And Draghi's press conferences are never boring. What the market's looking for is whether or not he's going to give any insight into when the ECB will complete taper. Now, this should sound like a really familiar statement, because here in the US, waiting for the FOMC to finally commit to taper was this, what seemed to be this endless waiting game. And if you recall, that was the end of 2014, going into 2015 conversation. And this is ultimately what happened. Now, remember, in December, that would have lined up to about here, we finally got our first rate hike. But look how much the market had moved in anticipation of once we knew the taper was going to be completed. Now, let me give you another look at the euro further back to see where we are now. So we're still, now the reason this trajectory is a whole lot more lumpy and a lot of this kind of stuff is because twice now we've waited for that announcement. Yes, one, we're starting taper. Great. The euro started moving up last May. And this was a big trade for us over at SF as we bought euro and took advantage of a really solid about 6-month rally. And then things got sideways. They went up again and things got sideways. Well, unlike the FOMC, the ECB keeps hesitating. They've actually initiated the taper. What they won't do is tell us when it's going to be done. And they keep extending the program out and out and out. So while they're actually purchasing less every time, now this is euro, but even though they're purchasing less, they keep extending the program out. So it appears to be accommodative. So the euro isn't able to rally. Now, all this might sound great. Okay, Rag, I get it. A lot of central bank macro. All right, the narrative makes sense. This is why it's choppy. Well, why do I think there's going to be more upside? Because we haven't got the end date to taper to then start to run ahead, run higher ahead in front of the next move, which is going to be the rate hike. You know, when are we going to start to get those rate hikes? So we haven't been able to discount that. Now, this is interesting for 3 reasons. Obviously, the euro. Second, the dollar index. Even though the dollar's been pretty froggy, that's a pretty nice jump there in the dollar, it's been moving higher. It's moving higher within chop. That's it. So it's basically traded in one overbought zone back in here for potentially another. So there's something to watch right there. Maybe we're going to head up to the 200 EMA. Who knows? And by the way, this is an EMA. It's an exponential moving average. I believe that once we get some Q from Draghi, US dollar is going to easily go back into the middle of the range, and I think inevitably make brand new lows as the euro makes brand new highs. Why do I feel so confident about this? The euro versus US dollar is the #1 market in the world in terms of size. And the way you put on a trade in the euro US is to buy the euro while you are selling the US dollar. It's the #1 way traders express an opinion about the euro currency. And the #1 way is, as I buy euro, I'm selling US. So it's inevitable that one's going to head up while the other heads down. The other thing that's got an interesting implication is gold. Because as the euro is testing an oversold level, gold is inching closer and closer and closer to an oversold level of its own. So you can look at it this way. Euro and gold move together, not because of each other, but because of the relationship with the US dollar. So the euro and gold can move up. Not any kind of, not really a correlation. I mean, to me, correlation means there's a cause. The cause is the US dollar. So if the US dollar heads lower because of the euro strength, you will see gold rally with the euro because of the US dollar weakness. So euro strength is gold strength because euro strength is US dollar weakness. That's the way this works. So I'm looking at a movement higher in the euro, movement higher in gold, both of which are sitting near oversold levels. And, well, look at my dollar. It's sitting up near possibly an overbought level, and it's ready, I think, for a move lower. And all this, I believe, is going to come to a head on Thursday. See you in the next update.